Hello, this is Vance, and this is Thursday, October the 23rd, 2014. And these are the CL trades for today using the slow hand method for price action. Just a note, just a real quick, another quick update with reference to the webinar that was supposed to take place today at 1 p.m. with Mac from Price Action Trading Systems. That's been canceled because Max experienced a family tragedy. His father passed on Tuesday evening, so therefore the presentation is not taking place. Is not taking place today. Matter of fact, it's 20 after 1. I sent notification out. I had to cancel the webinar and go to webinar. So if anyone's tried to sign in, that's the reason. There was no notification. Anyone that was on my mailing list, I sent out a mail notice to them to let them know that the presentation would not be taking place today. Mac published it on his website as well. I know that he mentioned that, but if you haven't seen it, and I made an announcement yesterday on YouTube with the final recap, and if you haven't been looking, if you didn't hear my YouTube recap, you're not on my mailing list, you didn't check Mac's site, you probably looked at a GoToWebinar. So I've been receiving emails from people wondering how come it's not on and so forth. That's the reason. And so hopefully you'll be able to figure it out with the next couple of sessions. Anyway, that's it for the time being. Our thoughts are with Mac and his family through this difficult time. Anyway, let's talk about the trades today. It was a good trading day as far as the CL was concerned. I did a demonstration trade this morning. I took a long right here, right above this doji, got my 15 ticks pulled back. I was talking about two things. I was talking about either prices was going to head up this way, pull back, and then head on afterwards. I was looking at it this way, but you see it touched again, and it did make its way up. So this was obviously a bottom of the tight trading range. I was also talking about the fact that it could have been this way. You know, we might have had this tear down here, and that price would pull back, and then it might fail like this. Well, that wasn't the case. It didn't test down there initially, so that's not what happened. So I mean, but it could have. So selling at the tops of the tight trading range, buying at the bottoms. I didn't sell here because I was in this trade, and usually want to see a break of it before you go short. I mean, it would have worked here. You can see it broke this and then failed. That's what I mean by breakouts. Most breakouts fail. Price broke out, failed down to here, and then got to the bottom, got support, moved up here. So that's why I marked these as trades. Now, these are aggressive trades. They're inside a relatively tight trading range, mostly limit orders. 15 tick stop box, you want your stop below the most recent price action. So this is really a blind buy, even though it's a second entry, break of this slight trend channel. Mac always talks about this as well. These little tight trading ranges where you get most of these things in the channels like this, he encourages you to draw them. And because it's a visual representation, you can see where the breaks actually occur. And he talks about it all the time. So, I mean, I didn't draw in all of them. I mean, it gets a little bit messy if you have to draw them all in. But if you look at something like this, for instance, where's this channel? Well, it's probably, it's kind of like this. That's probably where it fits best. And then if you double it up and you move it over to where it really gathers up, it probably is like something like this, maybe, somewhere in that neighborhood. But that's, you know, you want to see a break of this. And so you see the break happen here. There's a first pullback, failed. Here's a second pullback, and then another opportunity to get in. So you also look at it from the perspective of this being here we have the first pullback, second pullback, and there's a measured move. So, you know, there's ways of looking at it. I mean, does it work every single time? No, it doesn't. But I think it's pretty relatively clear that when you have a break of these short-term trend channels, this is what Mac talks about. Break of the trend channel, test to a new low, and then you enter from there. Especially when you look at this. Now look at this channel right here that I drew. And you're looking at these channels, you hit these two right here, hits this area right here, and all the way up. Anytime price came back to the EMA, came back to the trend channel, it was an opportunity to get in and for confirmation. And I'm not talking about confirmation. Look at, here is the first pullback. Now, would you get in here? I'm not sure. It's not back to this trend channel. It's not really quite back to the EMA. And so it's better to wait. And so you can see, and it came back down to here. Now, it did capitulate a bit. It could have turned down. But, you know, when price did find some, when it couldn't seem to get down below this area, using a limit order. But again, it's a more aggressive trade. So a limit order, it is stacking up. There is room to get out if you get into this trade. And look at it, really, once it got above these areas, and I talked about this as well, once price makes it above these areas and holds, then there are traders that are trapped, and they're trapped to the downside, and that's why you have these these really rapid moves up. That's really what is evidenced here. We had a price made a new high, pulled back to where previous support and resistance was. Here's previous resistance. Maybe, and you see this didn't break out. This failed. There's a failed breakout here. Price went up first time, failed. Attempted to go up the second time, and then immediate failure right down to this area. Price comes up here. Now it kind of hesitated here. You can probably see that. Price came up, pulled back, came up again, pulled back to here. This is almost a trade as well. I didn't mark this one, but it's an overlap, but you could have certainly taken something like that as long as your stop is below the most recent price action. If you really have chutzpah, you can limit in right down to here, like limit in right in this area. I didn't mark this one, but that's a much more aggressive trade. Price makes a new high. There's a first pullback here. You can see this is a first entry potential. Pulls back. Here's the second entry right here. Now, it's a little messy. This is almost like, because you see, it's almost like overlap here. But when price, again, when you get down here, you get your stop below this most recent price action, and then you have room to get out. Where's the room to get out? Because if you look at these double tops, depending where you get in, you've got these double tops right across here. So that's a reasonable trade. Another, pull back down to this area. This is really the first entry. Now, where's the second entry? Well, can you say this is just a first pullback? It doesn't work. Here's a second pullback. But on the other side, this is a second entry short right here. Price makes a new low, first entry, second entry short, right this area. And so you could trade counter trend. There's enough room to get out on these trades right here. And I'm not saying counter trend. I mean on these pullbacks. You could go short on these pullbacks. But when you have this kind of upward momentum, when you have this, stick with the second entry. Stick to coming back because the bias is up. It's up through here. Now, when price gets to this level, then you might have to say, okay, well, if this is going to be a range, if it gets to this area, how's it going to respond when price gets to these double tops up here? Well, you can see it resisted here, came up, resisted again. But then we got this area where it's stacked up quite a bit. Price makes a new high, pulls back here, breaks through, pulls back, and then finds support right here. And this is really a trap. This is a trap at the high side. Now, a more aggressive trade, obviously, where we don't know where the price is going to be heading up. I didn't mark it, so it's really like a breakout pullback long, or you say the first entry, second entry off of here. If you take it long here, by this time, if you entered in down here, you got your 15 ticks off. It pulls back here. You could add to it, but yeah, that's a more aggressive move. And again, is price going to break out of these areas? Well, it does. And as soon as it gets above here, look at this. As soon as it gets above here, what happens? As soon as it gets above here, price shoots up in this direction, and it shoots up from 81. Let's get 81.89 above here, 81.90 to 82.36. So this is a 40 tick move in this period of time, and this is from 11:03 to 11:08. 5 minutes it took to go 40 ticks. So this is where the stops were just really hitting the momentum, and on top of that, because it was breaking through here, there were other buyers jumped on the bandwagon and drove price higher until it got to this level, and then buyers are trapped on the high side. And then when they pull back, they've got their stops here. That's why you have this slashing down in the other direction. So a lot of this was taken back out. Now, I was finished by here. I was finished. I mean, I had a couple of these trades in here. It was fine for me. I was finished. But as you can see that now from the downside, there's a couple of opportunities to get in. And once you got these swings off these tops here and moving down, you can see that price was moving down. Now, tight trading range here, it does pull back. There's a measured move. Again, there are these little tight trading ranges that occur in or the tight trading channels that happen all along here. Now look at this pullback here. Pullback, first pullback, second pullback, another point to get in here. Now it's a long bar, and you can see it retested this area. So I'm saying that this, or it may even be here, is a tight trading range. Now the bias at this point, when it gets to here, it really, you have to say that the bias here from this high is down. Okay, this is the downward bias. So you get lower highs throughout here, except for this one, and then we have a slight pullback, but then it couldn't hold. Price couldn't hold above here, and it fails. Remember, most breakouts fail, so it comes back down here. We'll look where it's heading the other direction. And now where we are. we're down to here. It's a tight trading range. We have this break of this range. You're thinking that maybe, is it going to be here? We have the pullback to go in this direction. Well, it didn't quite work out that way. It's pulled back down to here. Now where's support? Well, support looks like it's down in this area. And this may be the new beginning of the new tight trading range. Again, this is a pretty rapid sell-off. This is just developing as I was talking. This happened within the last couple minutes. This move right here. There you go. This is 10 minutes. 10 minutes has gone down to here and pulled back up to here. So trying to reevaluate whether price is going to be heading up or not. Anyway, that's it. As I said, I wasn't here for most of this. I wasn't active in the market. I was doing some other things. But as I said, I'm satisfied. I've got a couple of trades in this area. And that's it. So hope you had a good day. If you have any questions, please let me know. This is Vance. Bye for now.